Look, it's pretty simple. It's really an opportunity for investors to be able to get offshore. And it's driven by simple observation. One, the currency's been at elevated levels for, I guess, probably 18 months, 2 years now. Pretty much at a high against all foreign currencies. So it's one of those once in 10-year, maybe once in 20-year opportunities to get money offshore. And then you also look at the local equity market, and 70% of the market is made up with banks and resources. Resources, we believe the sweet spot's passed. Most commodities have corrected 50%. So you now got at best a trading sort of market, but it's not the place you want to put long-term capital. You also have a situation where the banks are selling at their historical highs. So the upside potential is very, very limited. So bottom line is the risk reward in Australia in terms of equity is pretty skinny. You've got the currency at an elevated level, move offshore, take advantage of better risk reward opportunities. The reality of the last 18 months, why the currency, in my view, has stayed elevated for so long, is because of the Fed with their excess stimulus. The reality is, if you look at the traditional indicators like commodity prices, they peaked, I'm guessing, 18 months ago. Most of them, like nickel, copper, aluminium, have all corrected 50%. You throw in wheat, corn, etc. So normally the currency would have already have fallen, and if it was in sync with commodities, it'd probably be about 80 cents. So my belief, it's being held up because the Fed's stimulating, so the excess liquidity goes to the high yield markets. But we've already seen it start to correct. That started when they first started talking of tapering. And earlier in the roadshow, we were mid-90s and we're basically saying, look, take advantage of the gift from the Fed because it ain't going to be there for too long. The more they talk about tapering, and when they actually do, the currency is going to catch up to 80 cents. And then the rest will be determined by how big an impact China has on commodities and where they ultimately go. So, yeah, it's getting smaller and smaller. And even the last month, I guess the one, when we're doing the roadshow, that was in the mid-90s. We sit here today, and the currency is 91 cents. So it's already dropped 3-4% pretty quickly. We've actually moved the currency offshore, so we're now 100% US dollars. And it might bounce back up again, but I think within the next 3 to 6 months, that downtrend that we were talking about will generally emerge. It's a new experience, so we can only speculate. They should have started to do it 12 to 18 months ago. They're so paranoid about the GFC and the economy losing momentum that they don't have the confidence to just let business get on with being business. The reality is the markets are recovering, the economies are recovering. They don't need to be there. The company's got so much cash on their balance sheet, they're just waiting to use it. And to be honest, once the Fed gets out of the way, I believe it'll release pent-up demand because the companies or the CEOs will then have the confidence to say, okay, well, they're out of the way, the economy's okay, we're going to start spending. Employment growth, and it all starts to feed on itself. So the reality of life is you're probably always going to get an adjustment when they actually do it, but then things settle down and we get back to normal markets. The only risk I see is that because they've extended for so long, they're starting to create negative impacts. So, for example, some of the property markets around the world, you're starting to see what I see excess liquidity, not bubble, but excess valuation type scenario. You can see it in Australia. So if they stay too long, that's going to become a problem. But I'm pretty confident that the employment numbers will keep looking okay, and eventually they'll have to do it. So, yeah, I don't think it's going to be a problem. And to be honest, that should be where we get the chance to deploy this capital, because we've raised the capital. It's for the long term. It's not for the next month or the next 6 months. Short-term markets are back at their highs. We're actually being pretty cautious. But if you get a bit of a pullback from tapering, that's fantastic. That's exactly what we're looking for.